All right, good afternoon then, folks, as we have a look ahead to the coming week of trading. Monday, the 11th of December, as you can see. We'll flick across the high impact data over the rest of the week, which is pretty packed. As you can see, we've got a raft of different things to have a look at. We got inflation from the US tomorrow, obviously the two prints, the headline print and core CPI reading. We've also got the Fed on Wednesday. We've got the Bank of England on Thursday. We've got the ECB as well on Thursday. We also have the SNB, the Swiss National Bank, on Thursday as well. So raft of central banks out over the course of this week for their last policy decisions of 2023. So we'll have a look ahead to kind of what to expect. We see some economic projections from the Fed as well on Wednesday, namely the dot plot, which we will have a look at as and when we get to it. On Wednesday, but a quiet start of the week. Nothing over the course of today, apart from some consumer confidence figures out of Australia this evening, which is Tuesday morning, obviously for them. But we got inflation tomorrow, so we'll have a look at inflation. Inflation expected to tick up slightly to 0.3. It won't be too much of an issue in terms of the core CPI print, but I think where I'm certainly interested in is this. The headline figure is obviously the yearly figure once you include food and fuel costs, but inflation rate month over month. CPI for the month of November, consensus is for 0%, plus the previous was at 0%. So that shows inflation across the broader economy is not increasing. Where I think that gets interesting is if that goes into disinflation territory. So maybe we get minus figures. If we do get a minus figures, that is kind of the green light, I think, for stocks to go ahead and rally for the rest of the week. You'll come around to the Fed, and the Fed will certainly not. They might want to sound slightly hawkish, or I say hawkish, but they'll probably want to push back on rate cuts into next year. But we do have the economic projections. Now, the economic projections we got from September have been proven incorrect, or so Jerome Powell has said they've been incorrect, and that is likely to be proven incorrect once we get the interest rate decision on Wednesday. Now, they showed two more cuts back in September. Two more hikes, sorry, back in September, to bring the terminal rate to 5.75%. It's not what we got. We're sat here at 5.5%, and the Fed are seemingly done with interest rate hikes. Now, that is not to be unexpected if they do dial back their projections into year end. Obviously, it is year end. What we're looking ahead towards is next year. You know, some market participants believe we may even get an interest rate cut as early as March. Now, I'm not so sure I share that opinion, but we'll have to see the economic projections into next year. What does the dot plot say into next year? When do they think they are going to be cutting into next year? Where do they think interest rates will be at come year end of next year? Do we see multiple cuts on the horizon into next year? I think probably the summertime might be a better time frame, time scale, should I say, for interest rate cuts into next year. But you know, how many cuts are due to be in markets? I mean, they won't want to cut drastically. You know, they won't want to stoke any spike higher in inflation again. But you know, if economic data does turn sour, which it hasn't for the moment. I mean, you had some that missed data prints over the last month or two, but ultimately, the economic data is still okay. It does not point towards an impending recession in the US by any stretch of the imagination. So what do they feel with interest rate cuts going forward? I mean, yeah, as I said, markets were pricing in potentially March of next year. I don't think that's quite right. Maybe summer of next year, but the dot plot will give us a further indication as to what to expect going forward, especially if inflation goes into negative territory. If this 0% figure comes in below 0%, so it goes into disinflation territory, that is then a situation the Fed may bring forward their projections for cuts into next year. So we'll have to see how they feel on Wednesday. The Bank of England on Thursday. Again, we expect them to be done with interest rate hikes. So we just go back to the medium impact releases and go forward to Thursday of next week, you can see 3 out of 9 of them voted for a hike, and 6 out of 9 of them voted for the interest rate to be unchanged at their last meeting. That was a surprise, though. That was more than anticipated to be for unchanged and less than anticipated to be for a rate hike. Now, do we get any sort of surprise again? I mean, 3 out of 9 still voting for a hike. Going to get a hike. We have to imagine we don't get a hike. That would be a surprise to markets. But does this unchanged come in above 6? Does this vote for a hike, come in below 3. I think that's where I'll be focusing my attention on Thursday. Do we get another dovish step from the Bank of England? You have to imagine that they're finished with hikes. They still have left a hike on the table. They said we're ready to hike again if needed. Do they change that language? Do they go and suggest that interest rate hikes are done, therefore bearish for the price of sterling? I think I'd lean more towards that, but in terms of a tradable opportunity, if they come out and say, oh, interest rate hike is still on the table, if inflation pushes higher, that just causes a bit of a nothing meeting, if I'm being perfectly honest. The ECB, I think, is always an interesting one. Isabel Schnabel, member of the ECB, did suggest last week that further rate hikes were unlikely. Plus, the Bank of France had suggested that inflation or disinflation was happening faster than they had first anticipated, which has increased bets for interest rate cuts at some point next year from the ECB. Now, will they go and push back on that, or will they talk about that? They have said the interest rates are at a sufficiently restrictive level to bring inflation back to their target in a timely manner. So, ECB are done with hikes, but do they talk about interest rate cuts? Have a look at the way markets have moved. You can see euro dollar continues to trend lower. That is off the back of the ECB being finished with cuts. The DAX and the euro stocks are pushing higher off the back of the ECB being finished with cuts, also, or being finished with hikes also, should I say. So a couple of things for us to go off, and over a lot of things for us to go off over the course of this week. But that ECB, you have to imagine, it's probably not going to result in too much positivity for Europe. I don't think they have a legitimate reason to go and say, oh, we're going to hike again. There's more of a reason to say that we are done with hikes that will cause the euro to sell off. I mean, markets have got potential for a good week, but the way the central banks are at the moment, they probably won't want to step too far one way or the other. The Fed are likely to say, oh, we could hike again if inflation continues to push higher. Yeah, but do they? That kind of results in nothing, because inflation is not likely to push higher. So that kind of means a bit of nothing in that. But if they do go and give us a bit of nothing one way or the other, that kind of gives us the green light for markets to continue pricing in what they want to price in, and that for the time being is probably dollars lower and stocks higher. The Bank of England, which come around to it on Thursday, they're probably likely to again say, oh, there's still a hike left on the table, but we probably won't hike again if necessary. Same thing with the ECB. So I'm expecting a pretty similar thing. Certainly, pretty similar thing from the three of them. I think the one outlier is potentially the ECB. They've got more reasons to be more dovish than the other two. But the Fed, if they do go and confirm that they are done with hikes and do suggest they're going to cut multiple times next year, that then is going to be a positive for stocks, probably a negative for the US dollar. So I do think stocks probably end this week higher, barring any sort of hawkish surprises from the central banks. They're probably likely to be on the more neutral to dovish side across the three of them, which may not result in the best sort of trades, but then you can kind of get the central banks out of the way, and markets can deal with their own opinions then going forward. So this week might be a little bit tricky, but I think as we get into next week and the lead up to Christmas, next week will be relatively quiet towards the back end of next week, but certainly into year end and the first start of 2024, it will be rate cuts that are on the agenda. For the last couple of years, we have had rate hikes be on the agenda. Now it's moving to rate cuts. When are we going to get cuts? Who cuts first, I think, is the question at the moment. But inflation from the US on Tuesday, obviously Tuesday being tomorrow, may set the tone for the rest of the week. So we'll update more as we get on throughout the week, but central banks probably neutral to dovish, probably not likely to want to go one way or the other. If they do move towards speaking about interest rate cuts, do start saying that they are completely finished with interest rate hikes, that's probably the more probable scenario. I don't think they've got really much justification to be like, we're going to hike again, as the data does not suggest that is doable. Inflation is still a little bit too high, up at 3% year over year, but it's not a massive amount. If you get 2 months on the spin, no inflation, that is continuing to relax a bit. And yeah, I mean, if you do get into negative territory, that tells you all you need to know about the Fed on Wednesday. So we'll update more as we get along to it throughout the course of the week. Wouldn't surprise me. Stocks ended up higher this week. Have been trending higher through the month of November. Is this another kick in the behind to get stocks to continue their moves higher? Been relatively range bound for a number of weeks, but dips keep getting bought across U.S. equities, across the S&P. Every time Nasdaq sells off, some sort of buying comes back into it. The dip was bought pretty aggressively on the back of a strong NFP report and strong unemployment rate from the US last week. So I'd have to imagine stocks continue higher. The currencies may be a little bit trickier over the course of this week, but I don't think long stocks is the worst idea in the world as we head into a busy week of central bank decisions. So we'll update more as we get on through the week. We'll break down each decision as and when we get to it. We will cross those bridges when we come to them.